So Chrissy asked me to present the first presentation. So I thought about it, and it's so I'm going to present about something that that is kind of in a world that maybe not a lot of people might not know about. So I'll tell the story. So in terms of my background, I studied computer science. I went to Georgia Tech, and I started a company out of college. So I started a company, I think when I was like 21 or something. And so I've been running this company for about 11 years now. And then I started full-time investing probably about 3 or 4 years ago. And so I took this journey into investing, and the way I got into it is I started, like actually how many people here actually invest or like have assets or real estate, anything? And I'm kind of curious, what are some of the things that you guys invest in?
I have 2 properties, and then I have stocks and bonds.
So stocks and bonds and property. And what about you guys?
Stocks, bonds, property, crypto.
100% crypto.
Well, it's just gonna passively sit there.
And is anyone investing in anything that's not those things?
I haven't started yet, but I'm looking into water rights.
Water rights, okay. Cool.
A friend of mine owns a couple of things that Alhambra comes in and routes from his reservoir.
Okay.
So
Does he have like almond farms on it or something? Okay. So does anyone like know anything about water rights? So I don't know that much about it, but I've read that, for example, like you guys know that there's like a drought in California, right? So like one of the big strategies with water rights was if you look at certain crops like almonds, they actually require a lot of like water to actually produce, right? It's very water heavy, and so like farms that actually own their own water rights on their farm like have a huge advantage structurally, right? And so like a lot of these like investors are basically betting that once like the wells start running dry and like water becomes an issue, like the farms that actually own their own water rights are at a big advantage to like producing their own almonds and stuff. So I've seen like funds pop up with that kind of theme in mind. So, but yeah, so if you look at a lot of investing stuff, the thing is most of the time they actually talk about like who's ever heard of like instead of picking your own stocks, you buy ETFs, exchange traded funds, right? So these are basically like baskets. So what an ETF is, it's a way for you to buy, let's say, 1,000 stocks or 100 stocks by just buying one particular stock. So like, so it would be like, let's say the top 100 tech companies, or the top like, let's say 500 companies in the world, right? So it's a way to like diversify your risk into multiple industries through just one vehicle, right? And so, even the history of ETFs is kind of interesting. It actually didn't pop up until the 1990s, right? But if you look at a lot of investing books made for what they call retail investors, which basically just means like institutional investor would be something like a endowment fund or something like a big hedge fund, right? So these are like they're investing like tens of millions of dollars, right? But if you look at any book made for retail investors, the general advice is to don't pick stocks, because when you're competing in the stock market, you're basically competing against the world's smartest people. You're competing with the whole world basically, right? And because you are competing with the whole world, pretty much whatever price that you see a stock at, it pretty much is worth that price, right? It's like the market efficient theory, right? So when I started off investing, I started reading these books, and I was just thinking in my mind like, this is interesting, and I think this is probably really good advice for like 99% of people, right? But the problem with that advice is there's no room for growth and learning, right? Because if the advice is basically like just buy the S&P 500 and call it a day, right? Then yeah, you can do that and just hold it for like 30 years, but then I'm not constantly improving myself and understanding the world in a different way, right? So I started to try to look for books that, so this is often what I do is I look for books that talk about topics that are counter to the mainstream, right? So the mainstream advice is don't pick stocks, buy ETFs, right? What's the non-mainstream advice about, what's the counter argument to that, right? So I started looking at how really big hedge funds invest their money. How do really big endowments invest their money, right? So I didn't know anything about endowments before, but I was very surprised to find that like universities like Harvard and Yale and like MIT, they have a lot of money, right? Like Harvard has a war chest of like $30 billion, Like I always thought that universities just made money from their tuition, right? And for the smaller colleges, that's actually true. But for the major universities like Harvard, they get a lot of academic freedom, or intellectual freedom, I should say, from basically not relying on outside sources of funding. So what they do is they have a huge endowment, so $30 billion. And they hire like the world's smartest people basically to manage these funds, right? And so for Harvard, I think their record is something like they've gotten a 14% compounded return every single year for the last like 30 years. So like just imagine 14% on like $30 billion, right? I mean, we're talking about like 3 to 4 billion per year just from their investments, right? So if you look at Harvard, they might get something like 70% of their funding through just their funds alone, right? And maybe like 15% comes from like gifting, like from just Harvard alumni and everything. And a very small percentage basically comes from the actual tuition. So like basically the tuition they charge like kind of doesn't matter, right? Because like their endowment's going to keep growing and they're just going to keep getting richer. And eventually, they have enough where it's like they don't. It's basically fuck you money for universities, right? So they can explore and do on their own, right? So anyways, I started to look at this particular niche because I read a book called. Have you guys heard of a book called The Art of Learning? It's by Joshua Waitzkin. And there's an interesting concept in that particular book where he talks about. So Joshua Waitzkin, he's the original inspiration for was it Bobby Fischer or Finding Bobby Fischer, that movie?
Searching for
Bobby Fischer, yeah. So he was the original guy. I think he was the inspiration for that particular book or movie. And he talked about something that really made me think, which is that most people learn chess from the beginning of the game, right? Where like all the pieces are there and they look at the board from that position, right? But what he did was he did the opposite. So he started learning chess from the end game. So when you have like a king left and one pawn, right? So 2 kings and like 1 pawn, or 2 kings and 1 queen. He started learning from the end game what that looks like, right? Well, in the same way, a lot of times when you learn a subject, you can actually learn it backwards essentially, right? So you can look at like what is the end result like let's say you were to imagine like if I were like a multi-billionaire now, right? Like, what would I be doing, right? So study that first and work your way backwards, right? So I kind of took some of this advice. So I started looking into how to like I said, how to billionaires invest, how to hedge funds invest, how to endowments invest, right? So if you look at in the endowment world, there's a guy named David Swinson, right? And he's the portfolio manager for Yale. And so they call him kind of like the Warren Buffett of endowments. Okay, so he was hired in Yale in I think 1985. The portfolio at the time was about $1 billion. So the prevailing thought at the time was that to mitigate risk, you would have a portfolio of let's say like 60% stocks, 40% bonds. So that's just sort of like generally like if you go to like Chase Bank or you go to any like investment advisor, it's like, okay, like how old are you? Okay, you're 60 years old. We're gonna reduce your risk. You're gonna do 50% bonds, 50% stocks. And as you age, you just get more bonds and less stocks, right? Well, that's a very simplified model of the world, which sometimes like I remember when I first learned about that, I was like, this is way too simplified for it to be true, right? I mean, there's no way that it could just be that simple. And so, but if you look at like back in the 1980s, that was actually the general advice, right? So David Simpson, he came to Yale and he looked at it and he was like, you know what? Yale has a multi-hundred, like century-long, like sort of like goal, right? Of like, so like instead of like a lot of companies that they try to produce like quarterly results, like universities are thinking like 10 years ahead, 30 years ahead, 100 years ahead, right? I mean, look at how long like Harvard's been around. Like they don't need to like get quarterly results, right? Also, their structure is a little different. They don't actually pay taxes, right? So like they're actually a completely different vehicle, right? So he looked at this endowment and he said, okay, well, we're gonna basically completely restructure it. And so he actually like completely innovated the endowment model, which actually his model is now called the endowment model. And like every university pretty much follows his advice now. And so he turned that portfolio of 60% stocks, 40% bonds to a portfolio of 90% illiquid alternative assets. So these are assets that are not part of the mainstream market. So if you look at the portfolio today, it's things like venture capital, it's things like private equity, it's things like event-based market trading. Okay, so like event-based trading would be something like Trump is getting elected, all right? So let's say Trump is getting elected, there's Trump and there's Hillary. If Trump gets elected, then it's very possible that the Mexican peso will drop, right? But if Trump doesn't get elected, then maybe the peso just stay exactly the same, right? So that's an example of, let's say, a trade that is kind of riskless in some way. You can spend a little bit of money to bet that the peso will drop because there's there's a percent chance that Trump might get elected, right? But then even though you bet against the peso, if he doesn't get elected, you don't get hurt that bad, right? So people are always looking for these kind of like asymmetrical like risk reward trades, where it's like if you lose, you don't lose too much. If you win, you win really, really big, right? So anyways, like these are kind of like event-based type trading, right? So if you look at like big universities like Harvard and Yale, they do this kind of stuff. Like they have some of the smartest guys in the world doing this, right? So I think right now like 35% of the portfolio is in stuff like that. Then you have venture capital, you have private equity, you have real estate, and then what really caught my attention was in 2005, I noticed that they had a huge allocation to Timberland, which is basically like buying land and planting trees on them, right? So it really like I actually like looked at that line item and I was like, this is so weird. Like universities like literally own like land around the world and they plant trees on it. So we're talking about places in Vietnam, places in New Zealand, places in Brazil, Georgia, right? So I started thinking about this, and my dad actually retired this year, and so I started managing my dad's, basically funds, right? Like, because I kind of looked at his portfolio, like a couple years ago, and I was really surprised to see that his portfolio was just like in like some random. I mean, he had like 10 accounts or something, and just like random stuff. It's like it's not coordinated at all. It's just like it's like a laundry bag of like investment stuff, right? And I was like, Dad, we're gonna consolidate this and we're gonna figure out how to like create cash flow so you can retire, right? So I started managing his assets, and one of the biggest assets that he has is that he owns a bunch of land in Georgia. So he owns about 1,000 acres, which is roughly the size of like Central Park in New York, right? But he kind of did the whole Asian thing, like Asian people like sometimes they just sort of like buy land and they're like, okay, well, instead of keeping cash, we're gonna buy land because it's like safer, right? So he kind of did that thing, but so it's basically it's a bunch of land, but it doesn't like produce any kind of cash flow or anything like that. So I was just thinking like, okay, like something like half your net wealth or something like that is in this huge piece of land that's not producing anything. If anything, it's just a drain because you're paying taxes on it every year, right? So I started thinking about this, and it's like, okay, well, we can sell like 90% of it, the stuff that he's not using, and use that to, let's say, buy investment property, like in Vegas or in San Francisco, wherever it is, right? Or we can try to take a loan and use the land as collateral, and then like from that loan, we can invest in other things, right? So I'm just trying to think of all these ways to like produce cash flow, right? And then I read this book, and I was like, Timberland, that's it, right? So I started looking at, so I started looking up Timberland in Georgia, and I realized that this is one of the best places to produce Timberland. So actually Macon, Georgia, which is where I'm from, is actually one of the best places for Timberland. And so actually if you start looking at satellite images of my dad's property, literally all their neighbors timber farm. It's like rows and rows of trees, right? Like my dad was pretty much the only one that wasn't really producing it, right? And so I looked at this, and so I started like, really thinking about this, and in the book I highlighted it, and it was like, Yale was getting something like 10 to 14% return on their Timberland, right? This is like a crazy return, right? I mean, so this is like doing better than stocks, and it's Timberland, and it's like tax advantage. There's all these like interesting properties about it, right? And it's also like at the end of the day, it's trees, right? I mean, trees have like whatever trees you see, they've probably been there for like 20, 50 years, and it's not just going to die all of a sudden, right? So in terms of the risk trade-off, it's also very, very low, right? So then the question becomes, well, how come the majority of the world doesn't know about this, right? Well, there are a couple of things against it, right? So like it takes 25 years for a full cycle to go through, right? So like if you plant like a seedling and then you wait 25 years to actually harvest, it takes a long ass time, right? Like who's going to wait 25 years to like get their cash flow out, right? So during that time, you're not really producing any cash flow, and at the same time, it's like I guess the underwriting of it is just a little bit harder, right? So I took a look at this. So I actually ended up going to a 3-day Timberland conference in Georgia, which if you had asked me like 10 years ago, I'd never told you I'd like show up at some Timberland conference and learn about how trees are harvested, right? But like this is so cool. Like it was like the most badass people in like timber. They just knew everything about timber. There was like literally a panel of like PhDs in like forestry, and it's like they're just like geeking out on like the genetic variations of this and that, and they do a lot of like A/B testing, and So it's like 3 days of just me like going to different timber farms. It was just like, it was eye-opening. It was like really, really cool. So like UGA actually has a whole lab where they actually own a lot of timber. And so UGA, what they have is they have different sites where they've literally been testing, like A/B testing trees for like, last like 30 years. So you'll see a section where it's like, okay, we experimented with the spacing of the trees, right? So we experimented with like putting the trees 6 feet apart and 6 feet apart, so like a square, right? Then we experimented with doing, instead of 6 feet by 6 feet, we experimented with like 12 feet and 3 feet apart, right? So like, technically kind of the same density, like it works out to be the same density, but it's a different arrangement. And let's see if it affects the growth of trees, right? And so they've been doing these experiments for years, right? So it's really interesting. Since the 1900s, we've actually doubled our timber production every 20 years in trees, right? So there are actually more trees in Georgia because of a thriving timber industry than there were 100 years ago. There are double the number of trees than there were 100 years ago, right? So if you look at in timber, right, the most profitable trees are the ones that are really, really fat trunk and really tall. So you're basically looking for like the Yao Ming of trees. You're looking for like the LeBron of trees, right? And so you're trying to basically breed them, right? And so so by just like natural, by like kind of like artificial selection, they're basically just, they get trees that are really, really tall, really big in trunk, where the branches are really small, or they start at the very top, right? And these are the most valuable trees because you can produce like really good looking like veneer and like other like high quality wood from this stuff, right? And even within trees, right, you have different products. So like, let's say, because if you plant a bunch of these trees, you can either like crossbreed them or you can have like clones of each other. There are different like methods, and they've been testing these things for years, right? But you could produce different products. So let's say like you have like a kind of crooked tree, or you have like a tree that like bifurcates from the trunk, right? Well, what they do is they'll run it through a chipper. Like for like the really crooked trees, they'll run it through like a chipper, and they'll produce chip and saw. And then for like the twigs and leaves and stuff, they'll just run it through like a pulper or whatever. I don't know what it's called, but they sell like pulpwood, right? So you have like pulpwood, you have chip and saw, you have poles, you have saw timber, you have veneer. And so, for example, like pulpwood might be like $5 per ton. Chip and saw might be $10 to $15 per ton. Saw timber might be $25 a ton. Veneer might be like $45 a ton, right? So you can produce all these different products on trees. And they've also tested the economic, how to maximize the economic output of some of these trees. So this is a really interesting experiment, for example, that I thought was very interesting. So they doubled the density of trees. So let's say like 6 by 6, plant a bunch of trees like that, right? And then they did like half the density. So they might do like 6 by 12, right? So half the number of trees in the same area, and half the number of trees produce a much bigger tree, right? And then the ones that were more dense, they produced like much smaller trees, but much more, right? And so they did this experiment, and they figured out, okay, which one actually produces more income? And they figured out that, okay, they're almost exactly the same. It's actually pretty cool. So like, the market just works out where that actually produces almost exactly the same. Because you can produce, so basically what happens is that you just produce a lot more lower grade kind of wood if you have like a higher density. And if you have a lower density, you produce a lot less sort of higher grade wood, right? And yeah, I just learned a lot. I learned a lot of just like random facts. Like the southern pine beetle was like a big pest of pine trees in Georgia. Like Georgia, you have a lot of different kinds of trees. You have like loblolly. You have so the one I have on my dad's property, that's called loblolly. That's the most common tree in middle Georgia. And if you go like south to like where there's a lot more like rainfall and stuff, like let's say Florida or Panhandle, you have a different kind of tree. I'm kind of blanking on the variety, but I think it's called longleaf. Yeah, it's the longleaf pine. And those are the ones that produce pine needles, right? So every kind of varietal has its different properties. Like the loblolly pine is very, very tall. It has no branches until the very top. So it produces a lot of really high quality poles. And so poles is basically like what you see like phone lines and stuff like that, right? But you also have a side product, which is the pine needles, which you can use for gardening, right? And so I just learned a lot. So yeah, sorry, to get back to the southern pine beetle. So the southern pine beetle like wiped out huge swaths of trees like back in the 1990s, and it like just damaged like millions of dollars of like timber like in Georgia, right? So like that's actually been a big pest, and they're trying to work on trees that like produce more sap which prevents like bugs from eating it. And I think I was telling someone before that the way, like, have you guys ever seen like sap from trees? You know, so the reason why trees produce that, it's actually a defense mechanism. It's because the sap is so viscous that it actually blocks the mouth of a lot of beetles, so that they can't actually like damage the wood. So if you look at like trees that produce a lot of sap, that's why they're protected. You know, I mean, just imagine you're like crawling as a beetle, right? And just this like crazy glue is just like in your face, like you can't do anything about it, right? So it's a kind of defense mechanism. And so by learning about trees, it's actually kind of cool because like that's the way it works for grapevines. You know, I was talking about like phylloxera, which is like several hundred years ago in France, like 90% of the vineyards were wiped out by a pest called phylloxera, right? And what phylloxera did was it nibbled at the roots of a lot of these plants, right? And to the point where like they would just die because it's like these little bugs. And so so they started mixing the different genetics so that these vines would produce way more sap, and then the sap blocked out, you know, the phylloxera. So if you look at like the vineyards today, they're not quite the same vines as they were like hundreds of years ago. You know, so they're different. Yeah, so I started learning way more about trees than I probably should know, and then I approached my dad and I was like, I have a solution to your property. We're gonna make this into a timber farm. And so last year we started harvesting. Like we actually hired a forester. And a forester is basically the same as a real estate agent, but for trees. And so the way it works is that they contact the local mills, they negotiate with the mills to see like the pricing for how much tree they want to buy. They coordinate with the loggers that ship the trees, and you have the truckers the truckers ship the trees, the loggers come and cut it, and so they kind of handle all the logistics there, and then you pay them something like an 8% cut, which is what we're paying personally, right? So we hired a logger, and they pay you an upfront money for the trees, and then they start harvesting, and it's super cool. So I'm going to show some videos of my experience doing that. So
they're already harvested. So are the trees? How long have they been growing? Didn't you say they take 25 years to?
Okay, so in Georgia, pine grows almost like a weed. I mean, it's basically like a humongous weed essentially.
Okay.
So like even if you don't like explicitly plant them, they're just everywhere in Georgia. Like have you guys
you're
ever
harvesting the existing ones,
Oh,
the
so
one
you're
that
harvesting
there.
existing
okay.
ones,
So your land was not as efficient as maybe your neighbors, but it already was naturally growing the trees that you would need.
Yeah, exactly. So what we're currently doing is we're doing what they call a management cut. It's kind of like going to get a haircut. Like instead of shaving your entire head, you just like get a trim. That's essentially what it is, right? So like we're just like trimming the trees, right? So what we're doing is we're going and we're actually like picking the trees that are ugly, that are crooked, that are not big. We're running it through a chipper. We're selling like just lower quality stuff like pulpwood, chip and saw. We're just selling like light products. We're leaving the trees that are really good, and then now that you've cleared a lot of the bad trees, right? There's just less competition for the trees. They'll start growing much faster. So we let it grow for like a couple more years, and then we'll completely clear cut it. And then once we clear cut it, we're gonna put the latest genetics on there. So currently, I think my dad's trees, I think they, so we hired a forester to come in, and the way they measure the height of these trees is they measure, okay, so they have this like device, you know, I can't remember what it's called, but it measures the angles of things, right? And so what they do is they kind of measure like at breast height, like how big is the diameter of the tree, and they measure the height of the trees. And then you basically just do some math and figure out like how much like volume of timber you can actually collect from your harvest, right? So that's the way they do it. So I'll just show you some videos, which I think will be really interesting. This is like, yeah, this is my dog. Going to harvest. So this is my dad's land. Let's show this video.
Is that these are your lumberjacks or your mill harvesting the trees?
This is like the loggers coming in.
Wow.
So I spent like probably 2 hours just like watching this one guy clear a forest. You know, and I'm just like, basically just like one guy doing, you know.
Is the amount of acres you guys
That's my
have, is that an average amount for like the timberland?
Okay, so most foresters won't actually come onto your land unless you have at least 100 acres to clear.
Okay.
Yeah,
How many acres did you say you had?
1,000.
So they're probably happy to see you.
Yeah.
That's what I'm asking.
waiting.
Right,
Yeah.
we've been waiting for you.
Yeah. And you know,
What's the sound? Because you just have to hook up the Bluetooth if you do.
This is reminding
It's
me
basically
of
just
Jason. Did you ever see the movie Fern Gully?
Oh my goodness,
Right?
that's exactly the first thought I had too.
what is that?
It's a movie about the horrible destruction of forests.
And you can feel the, okay, so I had to like trim my own trees.
Yeah, you're the
I'm a
villain.
first time homeowner, and I was like, I don't know how to trim trees, because I'm cutting it down at like 5 in the morning. I'm like thinking about Fern Gully, and I'm
Yeah.
like, I'm hurting the soul of the tree.
All the tree fairies and
yeah, all the
right.
tree fairies.
Well, it's actually funny because so you'll see like some people have a actually like planting trees in a sustainable way is actually a very good thing for the environment because like I said, when you have an economic incentive to sustain the cycle of like harvesting and planting, then it's actually much more likely to survive. You know, it's kind of like you know I read that like there's like what 6 billion, 7 billion people on Earth or something, but there's like 40 billion chickens and cows or something, right? So it's like how do you ensure the survival of chicken? Like the chicken and the cow is like the most successful breed on Earth, right? Like they figured out how to make a way to be so dependent for humans to be so dependent on it that we just like produce it so much, right? But anyways, this is an example of a tree farm.
So these were pre-existing. They were already there.
Okay,
Somewhere else, right?
So when I initially told my parents about it, they were kind of apprehensive about, not apprehensive, but they didn't know anything about timber, they weren't really sure about it, right? So I wanted to give them some inspiration. So I actually took them to this is actually a state park, actually. It's actually not technically a farm, but they do harvest. And so I was just trying to show them like what the potential could be, right?
Tell us about these people.
This is my ex-girlfriend, this is my dad, this is my
What
mom.
we had to talk with.
Yeah. This is my brother Justin.
So do you guys have to do prescribed burns? Just
Burns.
Just in case there's any kind of like forest fires or anything, because I know like for national parks and stuff, they have
Right.
to do those prescribed burns where it's roped off, they burn down all the brush, so that way if there's any kind of like spark or lightning, there won't be an all-out forest fire.
Yeah, so in Georgia that's not very common.
Oh.
I believe it's much more common in California
right.
where it's a lot drier and there's a lot more forest fire. Yeah.
Because you guys are really like wet out there, right?
Yeah.
I mean,
I was like, look at all that water.
Yeah, right. That's like a
It's
rainforest
crazy,
almost.
Yeah.
Swamp. How deep would that water be?
That swamp?
Yeah.
I'm not sure. But I think this is like, I could be wrong, but I think it's cypress. Do you guys happen to know what tree this is?
You're asking
You're the
us.
tree expert.
Yeah.
I'm a pine tree expert here.
Yeah. What was the tree called? Like the Gullibalooey? What was it?
Well,
I don't remember.
No, the
Loblolly.
Loblolly.
Yeah, there's loblolly, there's longleaf.
Yeah.
You have the Christmas tree. Actually, Christmas tree is an interesting one too.
Yeah.
So that's like a niche market where you can actually have shorter cycles for your trees.
I wanted to ask you what your when you have you have 1,000 acres, right? And you're gonna decide on the allocation of trees.
Yeah.
And you said that you could have market efficiency in terms of the sales price by having different types. If you have the higher quality and the lower quality.
Mm.
So across your 1,000 acres, because you have such a large area, are you going to have some variation in what that like optimal composition of low and high quality would be?
Mm.
And then in terms of like the actual design of how the trees and other shrubbery and other plants would interact with each other to be more kind of more efficient
supplemental to.
to be supplemental to each other. Like, is that something that you've had an opportunity to yet get into, since you said that you were going to start kind of almost clear cutting and starting from scratch shortly?
Yeah, so that's an interesting question. Like the whole, having monocrops for things like cornfields and stuff like that is not generally like it can be a bad thing, right? Because it limits the local ecosystem. You have to start using pesticides, things like that.
And the soil gets degraded, and you like lose out on nutrients, and you have to have cycles. Do you have to have cycles for the? Oh, sorry. Can you answer the first question?
Yeah. So that's a great question. So the short answer is I don't know. But I do know that in the 3-day Timberland conference that I went to, they didn't really talk about that. So I don't think that's a problem for pine trees.
I'm thinking like wine, like terroir and stuff. Like you're
I'm always
Like
thinking about wine.
rotation.
Yeah, I don't think they're as vulnerable as something like a pine tree or like spinach or something.
I'm wondering kind of about how you like when I think about this. Like I think about this as being these trees are investments with different like liquidity cycles. So you're able to harvest different types of trees on a different kind of time frame, so you can manage your like cash flow really.
Yeah.
By the way, like by what you choose to plant.
Yes. So that's what. Yeah. So like